What is going on, investors? Hopefully you guys are having a great day out there. Time to talk about Palantir Technologies, ticker symbol PLTR. This company just reported their Q1 revenue. And of course, we're going to get over to it. We're going to take a look at the revenue, the profit, all the numbers that are pertinent to this business. We'll take a look at the balance sheet and the cash flows as well. We have to take a look at this stock chart, okay? Is this a buy the dip opportunity for Palantir? Can we come in here and actually buy the dip on this one? A lot of you probably are wondering that because let's face it, when you look at this stock chart, where did the vast majority of these candles, where the vast majority of the buying of this stock happen? $23 and higher on this one. So the vast majority of you watching this are probably underwater on this investment. And guess what? Including myself. And so we're going to be asking ourselves these questions today. Can you buy the dip? Should you buy the dip on Palantir? I'm going to answer both of those questions based on how much you already have invested in this stock. So we'll talk about that as well. Now, what's interesting before we get over to the numbers and the guidance and things like that, during a conference call, Palantir says that it is planning to accept Bitcoin as payment and it's considering investing in Bitcoin and other forms of cryptocurrency. And that is when this stock turned around because pre-market on just the results, the earnings, the revenue guidance, the stock was actually down to about $17 per share, but down over 7%. But this thing has bounced back. It's now trading at closer to $20 per share. Look at this big green candle. Look at what we've done since announcing Bitcoin. Now, here's the interesting thing. The co-founder just last month, wondered out loud if Bitcoin should be thought as a Chinese financial weapon against the U.S. So just a month ago, the co-founder of Palantir was wondering out loud if this is a weapon against the U.S., and now the company is looking to accept it as a form of payment and potentially investing in Bitcoin and other forms of cryptocurrency. Makes me wonder out loud, is this just a ploy to bounce the stock? Because as we get over to these earnings, this company is compensating, as you probably can manage, compensating their employees in stock almost primarily. Take a look at this. Just in the most recent quarter, $193 million worth of stock-based compensation. And who hates watching a stock decline more than shareholders? Look, it's the people that are getting paid in these shares. This is their money right here going down in value. This is like watching, your salary, your paycheck go down in value month after month. It's heart-wrenching. And so part of this earnings release where they talk about Bitcoin and cryptocurrency makes me wonder, are they doing this out of desperation? We'll see what happens. Now, let's take a look at these numbers, okay? We saw the Q1 guidance come in at $360 million. Okay, this is for Q2. We just reported Q1. Okay, Q1 came in at $340 million. You notice last year we did $230 million. A year later, we're up to this $341, and now we're guiding in Q2, the next quarter coming up, $360 million. That is 43% growth year over year. We just came off the heels of 49% year over year growth. Now, this 360 is probably a little light. Okay, they tend to come under what they tend to expect. So expect maybe 362, 363, somewhere in that range as these companies tend to come under where they tend to guide. Now, jumping over the numbers here. Revenue growth, like I said, coming in at 49% growth. Next quarter, we're looking at 43% growth. Our cost of revenue stayed relatively flat. That gives us solid gross profit here, bolting on over $100 million. We went from $165 up to $267 million of gross profit. Now, unfortunately, that's not the only expenses we've got here, okay? We've got sales and marketing, research and development, and general administrative, and those are blowing up across the board. We talked about how this is a lot of stock-based compensation. In fact, out of our total operating expenses of $381, 193 of it is actually stock-based compensation. This is why the executives of these companies feel a lot of pressure to make this stock go up, especially when you're on this epic slide, okay? They don't just feel it from you, the common shareholder. The primary really, they're feeling it from their employees. That's why this press release seems a little odd, considering the co-founder just kind of questioned Bitcoin, and now just a month later, this company is talking about accepting it as a payment and things like that. And again, when we're talking about a company with, I don't want to say only, but this is not a lot of revenue, this is not a lot of gross profit, doesn't really matter if they're getting paid in Bitcoin or Dogecoin or whatever it is. It doesn't really matter. Okay, this is not a lot of revenue. It's not going to necessarily move the needle a lot either way. So just wanted to talk about that. Now, our loss from operations, 267 was our gross profit. We have to minus this 381. Obviously, our total operating expenses really accelerated over, we'll call that about 150 million. That's actually more than we bolted on in revenue. So you guessed it, our loss from operations really accelerated, went from 70 million all the way up to 114. That brings us down to a net loss after you factor in interest expense, other expenses, things like that. You're coming in here at $123 million loss. Last year, we're sitting at $54 million. The other thing that's accelerating other than the losses is the weighted number of shares outstanding. We see here ticked up to 1.8. We were at 591,000. So you are getting diluted to the ninth degree on these types of things. Again, they're diluting the shares to raise money, but they're also diluting the shares, issuing the shares basically to pay the employees as well. Again, not necessarily something that's untypical to companies of this size and this maturity, but it is something that you should be aware of as an investor. Now, we're coming down to the balance sheet here. This is where we see cash and that type of thing. And as you can expect, a company just recently public. This company hasn't been public for long. It's not a very mature company from that sense. They are asset rich. Okay, we've got our cash sitting here on the balance sheet at we'll call it 2.34 billion. We're at about 2 billion at the beginning or the end of December. Our total assets ticked up nicely. Most of that sitting here in cash. Now, from a total liability perspective, we're sitting at $1.2 billion. There's honestly not a lot to see here. They have $2.3 billion in cash, only $1.2 billion in liabilities. As you'd expect, this company is very, very nicely well capitalized from a balance sheet perspective. Now, from a cash flow perspective, we get a little bit different visibility into this company. So from the 3 months ended here, right-hand column's last year, left-hand column is this year. We pull down this net loss number of that 123. We're at 54 million in the previous period. We add back in stock-based compensation. Okay, this is just from a cash flow perspective. We're only doing this to look at cash flows that the business is operating. They'd have to pay these employees some way or another. Okay, so I wouldn't necessarily discount this 193, but it does give you an idea from an operating perspective. We went from a negative 287 to a positive, actually, $116 million, especially when you don't factor in stock-based compensation, which again is hard to do considering these employees. The more this stock goes down, they're going to be like, well, I don't necessarily want to be paid in stock. I'd rather take the cash. Now, from financing activities, they're issuing stock options, common stock options, things like that, diluting you as a shareholder, but raising some capital on that sense. So there's the financials. They look okay to me. Okay, the guidance came in fine. Here's the thing that just broadly you want to keep in mind. Okay, from an operating perspective, we're losing $114 million on this one. This stock has a $36 billion market cap. Okay. And then from a revenue perspective, we're printing 340. You want to annualize that out. We'll just give them credit for a little bit of growth throughout the year. They're coming in at, $1.8 to $2 billion worth of revenue. And you got a $36 billion market cap. Is that a little rich? Yes. And I think that's why this stock has been sliding. Obviously, it was trading at a much higher valuation. $36 billion has actually come in a little bit. Now, do you buy the dip on Palantir? Is this the bottom? Is this where you can step in and buy this one? Now, here's the deal. I actually bought this stock, okay? I actually bought it at $24.79. I'll tell you why I bought it at $24.79, because the $23, $24 level was a hard level of support, and it held on as tight as it possibly could, but then it broke, okay? It actually broke down from here. Once it broke this $23, $24 level, it was almost for certain that we'd come down here to the next area that I have marked out here between $16 and $18. Now, we've bounced here in this zone, $16 to $18. This is a positive sign, okay, that we found some footing here. Now, if we break $16, we're coming down here probably to 10, 12, $13 per share on this one. There's just not a lot of price action. Okay, this thing went public down here at 10, 11 bucks, and it kind of rocketed up to this $23, $24 level and hung out there for a little while. Once we broke it, now this, you guessed it, this $23, $24 level should act as a level of resistance on the way back, okay? Can this thing rally back? Sure. But would I be surprised if we got above $23, $24 easily on this one? I honestly would be a little bit surprised, okay? Because the sellers will likely step in here at $23, $24. Not only that, you got the company diluting shares, things of that nature, employees willing to sell as this thing goes on a rally, that type of thing. Well, the thing I'd wait for, first of all, is a bounce, and we're seeing evidence of it here. Could we have a little bit of a pullback? Yes. If we don't pull back below this 17, say we pull back a little bit here, okay? We pull back maybe to 19. This thing rallies up to 20, pulls back to 19. I'm talking about not just today. I'm talking about over the next couple days, and then we see another leg up, maybe back up to 20. That could create a buying opportunity. Now, wouldn't necessarily be super excited about this one because, like I said, I see hard level of resistance here at 23, 24. It acted as hard support, so you'd have to assume on the way back up, it'd be acting at its hard level of resistance. Sellers are going to step in as we move back up into that range because look, that is the point where sellers left. Buyers left at 24. Buyers were here since December of last year, and then they dried up. Okay. Then more sellers stepped in. So as we come back to this point, do I assume more buyers will step in? Maybe, maybe not. Okay. Now, here's the other thing that you need to keep in mind for a buy the dip. Okay. Do you buy the dip on one good earnings report, one announcement about Bitcoin? Probably not. I'm just going to wait and see what happens with this one. See if we can create a higher low. Okay. We have a high, a lower high, lower high, lower high, lower high. I'd like to see us get above that and kind of close above that to signal some form of a reversal, okay? Now, we've seen evidence of that here, and it just didn't hold, so that's why I'm a little cautious on this one. The other thing that and this is probably the most important thing about the whole video, I talked about how I bought Palantir at this level of support, made sense from a technical perspective, probably not from a fundamental perspective, but what I want to make clear is my Robinhood portfolio is my speculative. I just kind of throw money in here. I deposit a little bit of money, and I don't throw it around willy-nilly. Believe me, I'm not trying to lose money. I'm not trying to lose 22%, which is what I'm down on my Palantir. But here's the deal. Is I only bought 10 shares at $24.79. That's only about, we'll call that $250 or so, I would assume. Now, am I down a little bit on this one? Yes, I'm down 22%. That's a lot, actually. Okay, but that's $56. $56. I just bought my son a pair of shoes that he's probably going to wear out in 2 months for $50. Okay, so I'm down a pair of shoes on this one. Now, if you had made the mistake and went overweight on this one, notice in my portfolio, this is only 1.4% of my entire portfolio. And this is a speculative portfolio. In terms of my overall assets, my entire asset base, you're including all my investments, my watches, my jewelry, my cash on hand, the value of my businesses. This is nothing. This is like a speck of dust. $250 is like nothing, okay? So that could be a buy the dip opportunity for someone like me that correctly sized this, that didn't go overweight this stock. This can be a buy the dip opportunity. If you're already in this for your 10% of your net worth, 15%, 20% of your net worth, which some of you watching this video honestly might have made that mistake. First of all, do not make that mistake again. Because as you saw, you went overweight at a much higher price on this one. You could have nibbled up here, just like I did. I nibbled up here, and now I'm getting a chance, an opportunity to dollar cost average. You almost always get that opportunity with any stock. It doesn't matter what the stock is. Almost no investor picks the absolute dead low and then watches it rocket up and never retrace back. Any stock from Microsoft to Apple to Amazon, all these stocks typically give you that opportunity, especially companies that have only been public for like less than a year. Okay. Companies that have been public for only less than a year almost always pull back. Look at Facebook when it recently went IPO back, years ago. It did the same thing. All these companies tend to do this. This is why you want to be very careful with your sizing on this one. If you want to throw $250 at it like I did and kind of wait and see what happens, play kind of a technical balance here, sure. Okay, now I probably will buy the dip, but I'm going to monitor this one. I'm going to make sure we see a reversal because, look, this one could have bounced on this press release, which really doesn't mean a lot to the company, and this thing can come down. If we break $17, $18 on this one, much lower price on this one. Okay, so I'm not sold that we are bouncing here. I am also not sure how much upside is in this one because, like I said, I anticipate sellers stepping in at this $23, $24 level. That's only $3 or $4 more than where the stock is trading today, whereas I see downside potentially of $8 in this one. So an $8 potential downside with $4 or $5 potential short-term upside, not good enough risk reward for me, especially from a sizing standpoint, okay? If I were to buy the dip on this one, and I'm showing you from my example where I only put $250 in this one, less than 1%, less than a fraction of my percent of my total network, less than 1.5% of this portfolio, I'd buy 2 or 3 shares at this level. So I'm just giving you an idea that yes, we have a buy the dip opportunity. If I take it, I'm only going to nibble at this area because, like I said, the upside is probably back up here to 24, 25. That's only $5 from where we're at. And if this level doesn't hold, this is a dead cat bounce and we go lower, we continue to make lower lows, lower highs. $11 in play is on this one, and that's $8 less than where the stock is today. So hopefully you guys enjoyed this video about Palantir. We'll be back again with more videos soon. Good luck with your investments.